Congress and the IRS have taken what should be a fairly simple process, inheriting an IRA, and made it anything but. There are rules within rules, traps for the unwary, and major tax consequences if you make the wrong move. Whether you're just a spouse, child, or even just a named beneficiary of someone's IRA, the rules have changed dramatically, especially after the Secure Act and new regulations finalized in 2024. Hi, I'm Hunter Brockway, founder of Boca Retirement Strategies, where we help people retire successfully, stress-free, with more money and fewer taxes. Today, I'll walk you through the key inherited IRA rules you need to know to avoid penalties, minimize taxes, and make the most out of what's left to you. Let's say mom left her IRA to you and your siblings. You're not stuck managing it together forever. You can split it into separate inherited IRAs, tax-free, by December 31st of the year after she passed. But one of the easiest places to make this mistake is in how the account is titled. If you just switch it to your name, the IRS sees it as a distribution. That's a huge taxable mistake. You can transfer the inherited IRA to another custodian, but don't touch the money. It has to go directly trustee to trustee. And yes, you can adjust the investments, stocks, bonds, and funds as long as it's allowed in a regular IRA, it's allowed in the inherited one.
Today's video got you thinking about your own retirement planning. I'd like to offer you something to help you see the bigger picture. We've created a tax-smart, comprehensive retirement workbook for pre-retirees and retirees. If there's one thing I've noticed in my years of working with individuals, it's that there's always at least one aspect in the planning process where they say, I haven't thought about that before. No matter how smart they are, how much they've saved, something comes up, whether it be they realize they can spend more than they thought they could. They realize their tax bill is going to be higher in retirement. They are going to leave money on the table with their current Social Security claiming strategy. This workbook is designed to help you walk through the most critical areas of retirement planning with action steps, false beliefs, and areas for you to input your own reflection items. You can download the workbook by going to the link below in the description. If you have any issues with that link, send us an email at contact@bocaretirement.com. If you get through this workbook and you'd like your responses reviewed or have any questions, I'm happy to have that conversation with you too. As always, this is no cost, no obligation, and no pressure. Best of luck.
Some unique inherited IRA specific tax rules and expectations are as follows. No 10% early withdrawal penalty for inherited IRAs, even if you're under 59.5. Roth IRAs, no need to worry about the 5-year rule either. But remember, traditional IRA distributions are taxable as income. Lastly, name your own successor or beneficiary. If you pass away before the inherited IRA is fully distributed, you don't want it ending up in probate or your estate where taxes could be even worse. Inherited IRAs can be a gift or a tax mess. The difference is how you handle them. It's important to note, we've only briefly covered one example today, and the IRS notes different types of beneficiaries for different circumstances, and the rules go on and on. Make sure that you read all of the rules for yourself and how they apply to your situation. If you've inherited one or expect to, don't wing it, talk to someone who knows the rules. If you have any questions around inherited IRAs or any other financial questions, you can send them in to contact@bocaretirement.com.